All right, let's dive right into this explainer. We're going to unpack a massive disruption that's attempting to solve one of the biggest financial dilemmas of our time, the post-pandemic commercial real estate crisis. If you've been watching the markets lately, you know that downtowns look vastly different today than they did just a few years ago. So today, we're exploring a fascinating proposal from a platform called OTTIMEDIA that aims to completely flip the script on how we value urban skyscrapers.
Section 1. The real estate crisis. To really get what this is all about, we have to start by looking at the existential threat currently facing commercial property owners worldwide.
And the crucial point here is this absolutely shocking projection. Office employment is actually expected to fall below 30%. Think about that for a second. Due to the permanent shifts brought on by work-from-home models and the rapid rise of artificial intelligence, the traditional office worker is simply vanishing from the central business district.
As we can see from this downward trajectory, traditional office rent alone just can't sustain the heavy operational costs or justify the massive valuations of these giant urban towers anymore. The math literally just doesn't work. The fundamental use case of the skyscraper is broken, meaning a completely new asset class is desperately required to prevent a total collapse in value.
So, that begs a really pivotal question. If the inside of the building is rapidly losing all its financial value, how on earth do we rescue these massive urban liabilities? Where's the untapped value in a half-empty high-rise?
Well, that brings us to Section 2, the digital facade solution. This is the core concept behind the Vienna-based OTTIMEDIA platform.
Their approach essentially says, hey, if the inside is losing value, let's monetize the outside. Instead of letting these buildings sit as empty liabilities, they are turning them into high-yield digital assets by literally wrapping the buildings in giant, transparent LED video walls. They aren't just slapping up a billboard, they are transforming the entire architectural skin of the building into an outdoor network capable of reaching hundreds of millions of on-site pedestrians and virtual spectators all over the world. It is a total paradigm shift.
Section 3. Monetizing building owners. Let's zoom in on how this actually fixes the balance sheet for those desperate property owners, because without them, none of this works.
What's really fascinating here is this concept of revenue stacking. Instead of just relying on that shrinking box of traditional interior rent, this model stacks a brand new layer of digital advertising revenue right on top of it. And this new revenue stream from the facade is projected to exponentially exceed the traditional rent, which instantly drives up the property's overall market value. Let's talk real numbers for a second. Owners are instantly monetized with a guaranteed base rent of at least $200,000 per year. But it doesn't just stay flat. There's a built-in automatic 20% annual increment to guarantee growth. Plus, the building owner gets a 20% commission on any advertising clients they personally refer to the network. It's basically a risk-free cash injection for landlords who are bleeding capital. Now, Section 4, the 120x advertiser advantage. You might be wondering, why would global advertisers actually fund this?
Well, look at the staggering economic contrast broken down here. A legacy top-tier location, like say Times Square in New York, could run a huge brand like Google $24 million a year, often with fragmented payments and a super slow ROI. But the OTTIMEDIA network, they're offering a massive, transparent canvas in a major metropolis like Mumbai for just $200,000. That makes it exactly 120 times cheaper. And because 100% of the capital is paid upfront within 1 week, it allows for lightning-fast depreciation of the investment for the advertiser.
But the value definitely doesn't stop at third-party ads. This whole setup doubles as a synergistic marketing engine for the real estate itself. It runs in 4 simple steps. First, you've got 15-second automated loops broadcasting the property's highlights to the city. Second, this content is psychologically optimized to influence a buyer's perception of wealth and prestige. Third, this achieves time compression, drastically reducing the physical visitation time needed for high-net-worth buyers visiting the city. And finally, that leads to accelerated closings for the property's interior units. The building literally acts as its own high-speed sales accelerator.
Which leads us perfectly into Section 5, the ecosystem flywheel. Let's look at how this builds into a completely frictionless financial loop.
The mechanics here form this perfect continuous cycle of value creation with zero friction. It starts with advertisers injecting their capital upfront, a full year in advance. Because that money arrives immediately, owners receive instant monetization through their base rent and commissions. And with that capital secured, the platform can achieve hyper-expansion, aggressively growing the network while returning massive margin yields straight back to early backers. It is entirely self-funding.
Section 6, the ultimate investor opportunity. Now let's pan out and look at the macro financial forecast for institutional investors.
For those looking to jump in, there are equity stakes available, up to 24% for $9 million. But there's a really interesting time-sensitive window mentioned here. Early movers can actually lock in a 1% stake for a reduced rate of $350,000 as long as it's before the end of June. Otherwise, it sits at $420,000. And it's all backed by a model of true transparency, giving investors unprecedented access, like daily online banking monitoring of the joint company accounts.
The projected hyper-yield timeline here is just staggering. We're talking a forecast of a tripled ROI within just weeks 2 through 4 of operation. Moving into the first few months, they project a minimum 3,000% yield as profit sharing kicks in, and within year 1, based on targeting a 20 to 95% global market capture, they anticipate an estimated global network turnover of $180 million to $900 million. All of this is aggressively marching toward a target holding valuation of $2 to $4 billion.
But hey, even without buying direct equity, the platform has created strategic paths for participation. They are offering highly lucrative commission structures simply for introducing reliable financial partners or investors to the platform. Plus, there are substantial asset brokering commissions up for grabs for anyone who secures new office tower owners in major global metropolises.
So, as we look at the future of our urban centers, we're faced with a massive transition. Those towering glass monuments of the past century are being forced to evolve, or they face financial ruin. The ultimate question for anyone watching the commercial real estate space today is this: as these iconic skylines transition from empty liabilities to high-yield digital infrastructure, are you ready to participate in transforming the skyline? Thanks so much for tuning into this explainer, and definitely keep your eyes on the architecture around you. It might just be the next big screen.